From one corporate voice to another, the management of Indigo Paints is with us, joining in to talk about their strong margin performance as well as their demand trends and focus to Tier 1 and 2 cities. Mr. Hemant Jalan is the managing director of the company and now joins us live. Thank you so much, Mr. Jalan, for taking time out and joining in. Let's look at a broader picture at the time being, because there is that slowdown at the demand level due to the macros. Have you witnessed a slowdown in Q4? Could there be any sort of an impact on that for your numbers in the coming quarters? Because this time around, you have seen a margin expansion. Revenues as well have been healthy at 288 crores.
So as far as the entire paint industry is concerned, definitely there has been a marginal slowdown in demand in the fourth quarter, but perhaps for reasons completely different from what other sectors have been experiencing. The slight demand slowdown that we saw, especially in January and February, were attributable to the fact that the paint industry had taken a very huge price hike in Q3, a price hike of around 15%. So the channel had overstocked on items in Q3 to avail of pre-price increase pricing. And therefore, the channels were in a severely, shall I say, overbought condition on 1st of January. Naturally, the volume offtakes in January and February were slightly low, and they started normalizing in March. And coming to April, I think the entire industry has seen a very good uptick in both volume and value growth. So I don't think that we are facing any contraction in demand due to any inflationary pressures as yet. And I think going forward, the demand looks pretty robust.
Okay, so you do sound optimistic, but the Tier 2 prices, they've seen an almost 5% increase on a sequential basis. What is the impact of that? Are you going to look at price hikes going forward? And if so, what quantum?
Not really. I think that most of the price hikes that needed to be done have been already done by the paint industry. There are some very marginal corrections that are going on a month-to-month basis. These on an overall basket of our paint products do not add up to more than 0.5 or 1%. So a very, very minor correction of less than 0.5% happened on the 1st of May. And another very minor price correction is slated for 1st of June, which would be of maybe 0.75% on the overall portfolio. So I think that for at least the last 2 months, the raw material prices have been relatively stable, albeit at the higher level. And I think most of that has been factored into the pricing. So I don't think we are looking at any drastic price corrections going forward unless something very unforeseen happens on the raw material front.
Okay, Mr. Jalan, so that's the take coming in as far as the prices which are expected to trend like going forward. But talk to us about your strategy as well. How are you looking at expanding your presence and your dealership networks? You've talked about that you're looking at focusing on 750 cities in Tier 2, Tier 3. How do you plan to go about that?
No, we have said we are planning to focus on 750 cities in the Tier 1 and the Tier 2 towns, excluding the 10 or 12 kind of metro cities or near metro cities of India. Now, basically, the growth story of Indigo Paints for the last 20 years has been driven by the Tier 3 and the Tier 4 towns of India. And that is where our basic playground has been for the last 20 years. And we have done exceedingly well in that particular space. We are now beginning to see that at least as far as network expansion is concerned, there is not much more room for network expansion in the Tier 3 and Tier 4 towns where we are extremely well penetrated, perhaps second to none as far as the paint industry is concerned. And even our share of any counter volume, because all counters are necessarily multi-brand, our share of counter volume or value sale in these Tier 3 and Tier 4 towns is pretty good. And although an increase will happen, it will happen incrementally over time. So now we feel that for the next few years, our focus has to shift to the Tier 1 and the Tier 2 towns. And those are the 750 large towns of India that we have identified. And we do have a fairly good network there. Some network expansion will happen, but largely it will be driven by increasing the share of counter sale in the network that we have in these 750 towns. And we hope that that will yield very good dividends and a very healthy growth to our top line and bottom line.
Okay, Mr. Jalan, and the good news coming in this quarter was also that the gross margins have expanded considerably. What led to that, and going forward, what should we expect with respect to the trend of margins?
No, the gross margin has expanded by only 70 basis points sequentially from the preceding quarter. They are still about 3 to 4 percentage points less than what they were, let's say, 5 quarters ago. So as raw material prices stabilize and as these minor corrections in selling prices happen, we expect to see small but positive improvements in the gross margins. They are still not back to pre-COVID levels. We are still maybe 3%, 3.5% behind those levels. I don't foresee that we will touch the pre-COVID margin levels in Q1, but incrementally that may happen in Q2 and Q3 as we go forward, provided, of course, that raw material prices kind of behave themselves, and there is no way of predicting that at this stage.
What is going to be going forward the growth strategy, and in terms of the growth outlook as well that the company is looking at? What's in the pipeline?
Well, I don't want to give any specific number guidance after being badly hurt by both COVID as well as this unforeseen raw material price escalation in the last 15 months. I think anyone would be wary of giving any number guidance as to what the numbers are going to look like in FY23. We sincerely hope that there would be, barring anything unforeseen happening, there should be good both volume and value growth, and very good growth as far as the bottom line and the margin percentages are concerned. I hope the margin percentages will be back to slightly better than pre-COVID levels next year. In terms of actual increase in sales, we just have to wait and watch and play it by the year until we have a few more quarters of normal behavior, not deterred by either COVID or an upheaval in the raw material prices. Then I think we would be a little more daring to give some number guidances as far as the full year are concerned. But overall, I think they should be fairly healthy.
All right. In the presentation as well, you mentioned that the company has seen good traction in Kerala. How much of revenues comes in from this geography, and what kind of further revenue growth can we witness?
So Kerala has performed extremely well last year from, I would say, July onwards. It was hit very badly in the second COVID wave, if you remember. It had the highest caseload in the country in May and June. So Kerala in the last fiscal, that is FY21, had yielded about 30% of our top line. It's a very important state for us. This year and over time, obviously with a fairly large market share in Kerala, the overall growth in Kerala is slightly lower than what we observe in the rest of the country for us, where we are at a slightly more nascent stage of development. So the share of Kerala revenue as a percentage of total does decline year on year. And in FY22, it is declined to 28%. And we are happy to see that, because it's not good to be over dependent on one particular state. But Kerala has been giving almost the same kind of growth rate as the rest of India has been given, which is very, very healthy. So they are upwards of 20%. And that bodes well for us going forward.
Thanks much for joining in and giving us an overview of the earnings as well as the outlook going forward. That's the management of Indigo Paints.